Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. It's December 20th, 2013. I'm Logan Burgess. To my right here is Cody Bills to help break down a relatively positive Friday in the grain complex. Jumping into the quotes here, we see March corn up 3.5 cents. Soybeans led to the upside, up 11 cents on the day. Chicago wheat was up 2 3/4. Kansas City wheat was up 4 cents. Cody, certainly not the biggest mover in today's action, but wheat did finally show a little bit of positive action late in this trade session. We've been getting a lot of questions in the office here. Is this the bottom of this wheat market?
Well, if I was looking at it, I'd say, you got to look back at the old saying, don't catch a falling knife. Now, this thing has been absolutely beat up for the last couple weeks. I say, we did see a little bit of strength here today, but it was on light volume. I wouldn't be surprised if that was just some short covering going into the weekend, especially after the negative trade that we've seen for the last couple weeks.
Yeah.
However, if you take a look at this weekly chart here, you'll notice that we are approaching that support line. And notice that support line is right next to that big whole number, $6. I wouldn't be surprised if we open up on Monday, if we end up trading down maybe a couple of days and find a little bit of support down around $6. I'd say pay close attention to price action around there, pay close attention to volume down around there. You might be able to get a little bit of support, a little bit of a short covering rally.
In today's action, we saw strength out of corn and soybeans as well. Certainly, soybeans was the leader to the upside here today. Take a look at the daily chart here on the January soybean contract. We talked about this on yesterday's show, you and I, Cody. Basically, this soy market has really been locked in this sideways channel here, 1350 at the high end, 1312 area on the low end. Today, we kind of made a run toward the high end. We saw quite a bit of selling pressure when we were up around 1345 today. But really a theme in the soybean market and the corn market in today's action was South American weather. Take a look at this map provided by Planalytics. You can see that we've been getting good rain events in central Brazil, but the area that the trade's concerned about right now is the area circled in red on this map, that southern growing region in Brazil, the northern growing region in Argentina, and today we had a more detailed map of that provided to us by Planalytics. Take a look here. This is basically a zoomed in map of that area highlighted in red on the previous map, and you can see here expectations right now are for temperatures to be 100 degrees or higher here over the next week or so, and not a lot of rain events in that area of northern Argentina in particular. This comes at a very important time for the crop. As we know, 68% of soybeans are planted, 61% of corn. So these early emerging crops are going to be emerging directly into some very hot and dry temperatures, and I think that's been working to put a little bit of a weather premium into this corn and soybean market.
Yeah, I agree, Logan. I definitely think this has been supporting the soybean market in particular.
Yeah.
But when you look at the major trends here over the next couple months, there are some sea surface temperatures to the west and to the east of Argentina that are favoring a higher pressure system, and that definitely spells a little bit of a trouble. We're going to have to monitor this over the next couple of weeks and really a couple months. If we do have that high pressure scenario, I don't think that's going to be very great for crop production down there, and I think that could really lend significant support here to the U.S. grain markets.
Yeah, we've seen, as we said, a little bit of a weather premium seems to get built in, and I think in general when we look at this market, there could be a good opportunity to make some sales, especially for producers that feel like they're a little bit undersold right now on the current year's crop. We certainly still feel at Grain Hedge that these markets are in a more long-term bear market. So if we can get a little weather premium here built into the market over the next month and a half, as I said, it could be a good selling opportunity. If you have any questions about kind of strategies of how to execute that, you can always give us a call here at the office. Our number is 877-472-4607. In general, Cody, I think that kind of breaks down what we saw here on a Friday for the grain market. We saw strength across the board for corn, soybeans, and wheat. We'll have to see if it can continue on Monday. Please keep in mind we have a great mobile trading app now available for iPhone, iPad, Android, and tablet. Visit us over at grainhedge.com today to take a free trial of that. Thanks for joining us on GrainTV. We'll see you on Monday.